Welcome back to the next half hour of The Why. I'm Tatevik Aprikyan in Chicago. Every night on the show, we bring you answers behind the headlines, helping you understand what's driving our world. The world of cryptocurrency is set for another roller coaster ride this year. The most popular and valuable form of crypto is Bitcoin, and its value can swing vastly on any given day. Before we understand why, though, we need to understand how cryptocurrency works in the first place. We asked our technology reporter, Tyler Adkisson, to explain.
If you're feeling like this cryptocurrency is a bit too cryptic for you to understand, you're not alone. It's obscure, it can't be seen or touched, but its popularity and value is undeniably rising. Bitcoin is a digital currency used as an alternative form of payment. You can use it to buy and sell things, or choose to hold on to it as an investment.
This is a shipment transferred 200 times, transparently tracked from port to port. This is the IBM blockchain.
The idea of the blockchain isn't unique to cryptocurrency. It can actually be traced to 1976, when academics suggested a group of independent systems should keep track of transactions. The creators of Bitcoin used this concept when it launched in 2009. No central bank, but instead a system of computers or miners using encrypted codes to digitally verify and track transactions. Because there's no central tracking and the identity of users is encrypted, Bitcoin is very difficult to trace, providing greater privacy. The concept exploded. Today, there are more than 6,000 cryptocurrencies, and while there are differences between them, the underlying ideas are similar. Honestly, when you talk about this, you hear terms like hash and previous hash and validation and mining, but the system makes sense when you set aside the jargon. Cryptocurrencies like Bitcoin and Ethereum operate on a system that uses high-powered computers to verify transactions. That's called proof of work. It's proof that the Bitcoin transaction is real. A log of those transactions is kept on a ledger known as the blockchain. Blocks on the blockchain can only be unlocked with a specific 64-digit code known as the hash. Bitcoin was designed with a finite supply. This means there will only ever be 21 million Bitcoins in existence. There are roughly 2 million left to be mined. And there are millions of Bitcoin, about 4 million, that are floating around unused. This happens when owners of Bitcoin misplace or forget their password or private key to unlock their digital wallet. Once it's gone, it's nearly impossible to find. So that's Bitcoin in a nutshell. Built on a system of blocks, each containing encrypted information, each one chained to the next, allowing cryptocurrency holders to validate and give the digital currency its value.
Newsy's technology reporter Tyler Adkisson is here with us tonight in Chicago from one of our studios just next door. We're staying distance to stay safe, of course. So, Tyler, you're an expert on this. Let's do a bit of a crypto 101, if you will. First question for you. Help us understand what digital currency really means. You can't hold it. Bitcoin might sound like a coin, but there's no physical coin. So you can't touch it. You can't print it. What's the best way for us to understand this?
Yeah, I think it kind of helps to think about it as a speculative asset or a kind of investment rather than a currency. Now, to be clear, Bitcoin is a form of currency. You can go and spend it in certain places. It's not necessarily going to be easier to spend than a US dollar, but you can go spend it. And, you know, I sometimes hesitate to think about this as a currency, though, just because there's no real ubiquitous acceptance of Bitcoin as a currency. Like, you know, most businesses still accept the US dollar, and for good reason. It's stable and is really easy to spend. Now, think about this from the perspective of a business owner. Say you do allow people to pay for goods with cryptocurrencies. The problem is that, you know, the value of those cryptocurrencies can just dip incredibly fast after you do originally take it. You know, for instance, about a week ago, Bitcoin was trading for about $47,000 or $48,000, and as of today, it's hovering around $43,000. And, you know, a lot of central banking systems do see cryptos as a speculative asset as well. You know, in an event last year, Federal Reserve Chair Jerome Powell said that cryptos are more of a speculative asset because they are so highly volatile, and they really don't have any use right now as a store of value.
Okay, so how exactly then do you get more? You can print money, it's in circulation, but cryptocurrency is mined, and this is a little confusing for some people. So explain mining. It's not mining in the traditional sense, and I want to clarify that word for our viewers. Mining is used in the crypto world to reference people solving math problems on a computer, which is then how you get more Bitcoin, for example. So take us through that a little bit.
Yeah, so currently cryptocurrencies like Bitcoin or Ethereum, they operate on what's known as a proof of work system, which uses these power-hungry, specialized computers to verify transactions for people that are sending cryptocurrencies on a ledger that's known as the blockchain. So at its most basic, these computers work to guess a 64-digit code that, once it is discovered, it opens up a block on the chain to verify transactions. And whoever does end up opening that block, the winning operator, they end up getting a reward for solving that puzzle. And so as more blocks are unlocked, the puzzles get harder, they require more energy, etc. These machines that people are using are really energy intensive by design, and they serve as a security feature for blockchain networks to keep cyber criminals away from trying to get in there. And when I say energy intensive, I mean energy intensive. According to Digiconomist, right now, Bitcoin uses about as much power as the entire country of Thailand. You know, a single transaction is the equivalent to the power consumption of the average U.S. household over a period of 78 days. You know, this process is so energy intensive that several countries have actually moved to ban Bitcoin mining, most notably China, because they really do contribute a lot to the issues that we see with carbon emissions and global warming at large.
Wow. Okay. A lot of people are kind of stepping back with that one and going, I had no idea. Tons of new information there. So like you just mentioned, there are lots of different types of cryptocurrency. Bitcoin may be the one that most people are familiar with, but there's a lot of others, right? Dogecoin, Ethereum, like you just said. Is that kind of like for us to envision that as the dollar or the euro or the yen, or is it totally a different idea with each one holding a different value?
Yeah, each coin holds a different value, but before I want to get into that, I kind of want to give a snapshot about what the entire cryptocurrency market looks like right now, because, you know, even though there's tons of different cryptocurrencies out there, the market is remarkably concentrated. So according to data that was compiled by Finbold as of October 2021, the top 3 cryptocurrencies, which make up just 0.02% of the more than 12,000 coins on the market right now, accounted for almost 70% of all the crypto market's value. Bitcoin has the largest share at roughly 47%, Ethereum has about 17%, and Binance Coin comes in third at about 3%. But they do have radically different values. Like I said before, Bitcoin is currently trading at about $43,000, Ethereum is at about $3,400, and Binance is at about $480. Now, cryptocurrencies are like the dollar or the yen in the sense that, you know, people think that they have value because they think they do, and because people will accept it as a medium of exchange. And, you know, that might sound kind of goofy, but these cryptocurrencies also have value because people think they do. And if it sounds kind of weird and shaky, it's because it is a little weird and shaky. You know, because of that, really the value is derived by the idea that, you know, if you think that one day the coin that you hold right now might be worth more than it currently is, then, you know, demand will continue to grow and we'll continue to see value grow.
Tyler, thanks so much for breaking it all down for us. There's a lot of information here, a lot of confusion, a lot of new things for people to learn as we get more familiar with cryptocurrency in our lives.
Thanks for having me.